Hey guys, welcome to another episode. Thank you for joining. Today we're going to talk about yet another very interesting topic, which is how is money printed? I think very often we hear people talking about the money printer, how there is a monetary expansion. But what I have noticed is that most people, when they hear money printer, they actually think about physical bills, physical coins getting minted, getting issued, and getting put into circulation. And yes, that's something that could happen. It's part of what happens every so often, where actual bills and actual coins get introduced into circulation. But that's not the kind of money printer or money printing that we talk about when we talk about monetary inflation and monetary expansion. So one thing that you should understand is that there are several ways that the government expands the monetary supply and basically prints more money. Printing not in the sense of creating these new bills or coins, but printing in the sense of introducing more units, more dollars into the system without anyone noticing, and basically with everyone absorbing that introduction of new units in the system. So let's talk about the 4 or 5 ways in which this happens. The first one is essentially fractional reserve banking, where any commercial bank, any banking institution, just by virtue of issuing credit, the second that I am depositing something and they don't need to have any reserves on their end, and they can lend the exact same amount of money that I deposited to someone else that will also deposit it in their own account, it means that it's an ever expanding monetary supply, which again, only one out of the 2 scenarios that I just described came from money actually worked. The other one came from money from the future, that is basically risk. But in any case, that changing of hands where actually 2 people think they have the same amount of money, but only one worked for them and only one is actually accessing it while both of them see it on their bank account, that's a monetary expansion by fractional reserve banking. Then secondly, commercial banks, whenever they issue a new loan, for instance, I own a personal training studio here in Austin, Texas. I basically opened this business in 2019 and I opened it through an SBA loan. So what does this mean? It means that it was a small business administration program to fund small businesses. And when I went to my local bank and applied for this kind of loan, yes, they verified everything. They created and validated the business plan, the cash flow and everything. But when they approved it, it wasn't money that they gave me. It was basically just a contract that they, yes, issue the money, but who's paying for that money? Who's creating that money? Where did that money come from? The actual starting capital that I use for my build out, for the initial launching of the business, it all came from nothing. It came from this SBA program that, again, the second a banker says this small business loan is approved, the government is funding basically this with money that didn't exist in the past. The same applies with a mortgage, for instance. If you're applying for an FHA loan, basically first home administration or application, where you have some benefits and some incentives from the government, well, all of those incentives, all of that money that is given to you is not coming from any deposits. It's coming out of thin air. So commercial banking and all these government programs also introduce money into the money supply. Then basically debt ceiling increases. Just earlier this week, the big beautiful bill got approved. It means that basically we're introducing a $5 trillion into our deficit, and the debt ceiling has kept getting increased. So the second that we say, hey, we're able to spend way more than we have in the past, and oh, by the way, we're not bringing in as much revenues as we did in the past. The revenues in the government are the GDP. Basically, what you're doing is getting into debt in basically who's paying that debt? It's not the government. It's not a magic solution that comes out of nowhere. It's you, it's us as taxpayers, where every one of our dollars that we have in circulation, the only thing that is happening is that they're losing more purchasing power, and part of that dollar is funding all this expansion, all these expenses, all this debt that the government is also issuing. Now, the last one that I can tell you is a little bit more tricky, happens when the Fed, basically the central bank of the United States, starts trying to stimulate the economy, and they get into what is called quantitative easing. So when quantitative easing or QE takes place, basically the central bank, the Fed, starts buying some assets from or debt from banks, and essentially that purchase introduces liquidity into the bank system and indebts more the US government. So once again, just realize that we're in a system where the limit for how much money can be introduced is infinity. There is no limit. And we're now facing a new technology, Bitcoin, which actually introduces a hard cap of 21 million coins that cannot be infringed. Many governments, many folks, many other developers have tried to challenge this, to modify it. At this point of Bitcoin's network maturity, a hostile takeover, a modification to the 21 cap, it's simply impossible. I created a video for that a few months ago. You are welcome to check it out. But again, we're basically with these contrasting ways of managing money, where on the one side you have the US government just saying, trust us, this thing has value, but now the track record and now everything that we see they have in their power to expand it is just happening and continues to happen, and it won't stop. And on the flip side, you have this technology which is decentralized, that no government can control, and that has a finite 21 million supply cap. So think about it yourself. Maybe it's time for you to pay a little bit more attention. And until then, you can follow me, you can click like, subscribe, share, and help me to grow this project. Anyway, talk to you soon. See you on the next one.